Well, it's that time again, ready for our monthly market update. I am Callie, the broker and owner over at Ritchie Realty. And if you are tuning in for the first time, welcome. If you're a repeat offender, welcome back. If you know what we're doing, we're talking a little bit about what's happening in the Dallas-Fort Worth Metroplex area as it pertains to real estate. But even specifically this week, I want to talk a little bit about what's happening in the Alliance area as well, because I know a lot of people are interested in what's happening over here in the Alliance corridor. So we're going to talk about all of those things, what's happening with prices, what's happening with, interest rates, what can we predict where going forward, how are we looking and shaping, and how healthy are we going to be this year, right? That's what everybody wants to know. So we're going to talk about all those things. But now, as I tee this up, I would love for you to drop your comments, give me a thumbs up if you're liking what you're hearing. If there's some other things you'd like to know about, please let us know because we, at the end of the day, do these videos so that you can become the very best at it is when it comes to buying, selling, or investing. So, with that being said, let's get the show on the road here. Now, this is a year over year from February close, and we're looking at Dallas, Collin, Denton, and Tarrant counties, the four major counties here in the Metroplex. And as we can see, at the end of 2024 in February, we closed out with a median sales price of 394.8. And then when we closed out this year in 2025 in February, our median sales price was 400. So as you can see, we're looking at somewhere, let's see here, somewhere around this 1.3% change year over year. Now our days on market, that's not a very significant change. As you can see, just even in the graph here over to the other side of your screen, it's kind of been fairly flat, right? We did see a little bit of rise, a seasonal rise, and then it changed all the way from there. Now, our days on market, as you can see, went from 38 to 56, which is a big increase in our days on market. We started to feel that impact. And our month supply of inventory changed as well from 3 to 4 months supply of inventory. Active listings were on the rise, expired listings, those are homes that didn't get sold, those were on the rise. And guys, it's all kind of part of because our sales were also on the end. So you think about that. Demand was down, inventory was increasing, and a lot of things were going on last year, right? So it did make an impact. Nonetheless, it didn't really impact overall the Metroplex that much of a significant difference. It's interesting to look at this because if we were to look at a national level, and Dallas, I think I saw the records just for Dallas alone was 1.6% increase year over year. Whereas if Chicago or some of the other Miami were 5 to even 7%, which is a whole lot more than where we are in the Metroplex. So once we start going on a national level, right, we can start looking at some more micro levels, and every micro market area in the Metroplex is even going to be different. Hence, why we're going to go to this next screen over here about what's happening in the Alliance corridor area, because I know so many people want to see what's happening over here. So if you can see here, we closed out in February of last year at a median sales price at almost 380, and we came down to 372 and a half. So that change was a slight change of about 2%. Again, I'm not too concerned about that because we know that we saw it the big push really in June, and that's where sales were happening or contracts went into May for them to close in June. We saw a big peak there, but we did kind of see a rise, and then it all started to come down. But what is going to be interesting, and I'm going to show you here in a minute why I'm not too concerned, because there's some leading indicators right now on our pending sales that make me feel like we're going to start seeing our spring market and rising. And we're always going to see some volatility. We could have one number that kind of skews something in 1 month. So overall, I'm really not too concerned about this. Our days on market have stayed kind of flat. Our months of inventory did go up. Our active listings did go up by 30 extra listings, and our number of sales went down by 30. So again, I'm not too concerned about that because this next slide, pending listings here in the Alliance area, you can see where we're heading. We're starting to see, and these are homes that went into contract. We can start see in February, they started ticking up. And it's going to be interesting to see what happens at the close of business in March, where we are at that point. And that's just beginning the very Even February, seeing that slight pickup is really good and really healthy. And I'm going to predict that we're going to continue to see that happen through our spring months. So it'll be an interesting market nonetheless, because if you heard me talking, last year was such a volatile time. And what we saw was the peak at an earlier season than where the normal peak is, which is later on in, July. So we saw a different market last year, and I think that's had an effect on where we are today. Nonetheless, if we were to take a look at the home price forecast, and this is for national, if we're looking at from what Wells Fargo says, what NAR says, what Zillow says, all these big people that have all these, smart, intelligent people that, we call economists, what they're predicting. And as you can see, most everybody is in the green, with exception of a couple of people. But overall, everyone's predicting about 2.7% on average nationally. So, if we give some credibility to what these economists are saying, we can expect that we're going to see somewhat a slight change. And nonetheless, it's kind of a sideways move, right? If we go back to what we were looking at, it's really kind of just been a sideways move. And even the chief economist over at CoreLogic says that home prices have mostly been moving sideways starting in late summer, like I said, through the end of 2024, starting a trend that will continue into the early months of 2025. So we'll pay attention to that. Here also, Zillow says prices are expected to rise this year. Woohoo! Though most will do so at a more slow rate than they did last year. Again, we're still seeing some appreciation, just at a slower rate than what we had seen in previous years during the pandemic, and then even pre-pandemic. We're just kind of more sideways moving. What about rates? Let's just go straight onto it. I know, and this is like something that everybody wants to know, because it's going to could make or break what you do as far as purchasing a home or selling a home this year, right? So mortgage rates this year, as we can see, they have started to decline, and where we can see them in February starting to make that track down. Now here we are in the middle of March, and we did see them pick up a little bit, and we're going to continue to see some volatility in the rates. But let's look at this. This is the lowest rate for the 30-year fixed mortgage in 2 months, marking 6 consecutive weeks of rate declines. So even taking, a median sales price home of $400,000, which if you saw that for the Metroplex, that's about where we are. That makes a difference about $60 for your mortgage payment every month. So that may or may not be a deal breaker for some of our buyers in the market. I just thought it was an interesting piece of information to see. Nonetheless, here's the thing, and this is the reality. Rates are declining at a faster rate than what people were expecting. So if we were to take a look at today at 6 points, around 6.7, again, we're seeing some volatility, but some are hovering around 6.7. It was expected that during the first quarter, we would be almost at 7%. So that is a little bit better news than what we were anticipating. And we can see that, still the predictions are that we're going to see those rates coming down. But could you imagine what will happen if we continue on a faster decline than what was expected? It will be just so amazing, right? All right, now what is impacting the rates, and when it's still going to be, I don't, guys, I'm so sorry if you're expecting 3-4%, we're not going to see that. I don't think we're even going to get into the fives this year, because what is impacting it is the inflation. And we can see that in March 22, we saw a peak of inflation right here at 5.3. And it was about that time, or somewhere near later that we started to see the rates kind of tick up to be a hedge against the inflation. And so now where we're sitting right now is at about 2.6. Now where the Feds would like to see it is at about 2. This little target range right here of 2% is where we would like to see that happen. And once that happens, well, here we go. If inflation continues slowing this year, we should see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. Now, That's great news for our buyers, right? So if you're a buyer, hopefully you're kind of putting some money away and getting ready to make that purchase. Because even a small rate change can affect your buying power. So take a look at this here. If you were trying to keep your mortgage payments somewhere around this 2,500 mark, you can see that if rates are at 7%, which is where they were predicted to be, you would only be able to afford a $380,000 home. Now, as rates came down close to this 6.7, 6.75, your purchasing power went up by 20,000 to 400. If rates come down even a little bit lower, right? Now at 6.5, we're still at a 2,500 mortgage payment. But if they get to 6.25, then your purchasing power even increases more. So you can see, take a screenshot of this if you need to, or hit me up on the bat line and I'll send the slide to you so that you can kind of see this. Make sure you're getting with your lender to get even more accurate information as it pertains to the loan product that you are deciding to use. All right, so that being said, I'm going to stop this share. I hope that you've learned a little bit of something. Again, please feel free to drop the comments. Let me know what you think about these videos, even if you don't like it. Hey, I just want to hear something from you. Until next time, continue to educate yourself on the real estate market. Hit us up on the bat line. We're happy to help. Take care and happy end pretty soon to the first quarter of 2025.